bringing in Nirav Sheth, then Head of Institutional Equities at SBI Cap Securities. He's joining us on the show right now. Nirav, thanks very much for taking out the time.
Thank you.
So, while there has been the India interrupted story, where you did see that pause, you did see that correction, we sort of gained ground again. Would you say it's just an India interrupted story or an India disrupted story with the global market shenanigans, with what's been happening, with the China and US trade war, with our elections coming around? How would you read into the India story?
Well, my personal view is that India's story has always been one of interruption, right? So
it's never disruption. It's
never disruption in a sense that, you can go back 5, 10, 15, 20 years. You've seen nationalization, you've seen emergency, you've seen the worst form of political coalition, 1998, right? And as long as your earnings keep on growing at about 13, 14, 15% CAGR, eventually your stock price will follow that, right? So that is a long-term trend. You can do whatever maths you want to do, and you can make a reasonable assumption that nominal GDP will compound at about 9, 10%, maybe 11%, and earnings can do a CAGR of about 12 or 13%, which is reasonably a very good scenario when you look at the global world, right? So it is a issue of interruption. Now, what went wrong? 2017-18, the big story, global story was in sync global growth, which is the best situation to be in. In FY18 and first half of FY19, you had seen desyncing of the growth with US firing, right? And that is not a happy situation, because then you talk about higher interest rate differentials and a stronger dollar. You cannot have a bull market, resumption of a bull market or a bull market in emerging markets when your currencies are falling off. And that has to happen when the dollar is getting stronger. The good thing in the last 1 month is that now we are seeing that reversal of a trend. And it doesn't seem to be a correction, it seems to be a change of the trend, right? So if you look at the corporate bond spreads, they are about 130 basis points now over the US bond yields, right?
Yeah.
So that's a point to, in a sense that I think that there'll be rebasing of what the Fed is going to do over the next 1.5 years. And that is a happy situation to be in.
You believe that Fed may not go as aggressively as earlier thought of? I mean, would this be a factor?
Well, if you look at the market expectations, which is basically the Fed implied increases, they are just about 45 bips. And Fed was forecasting almost about 3 rate hikes. So market was behind the curve. To that extent, Fed was ahead of the market, right? So I think that Fed will probably get tuned to what the market is expecting. What you essentially want is, you don't want US growth to collapse. That could have another leg of risk of trade, right? The best situation is that a sort of moderation or some sort of a cool landing is what you want to look at. I think that is a base case scenario.
The other part is to look now in the next year and look at it as a matter of two halves. So your first half, you'll have all of your elections taken care of, whatever other surrounding noise is there, which can lead to a lot of volatility, will be taken care of. So in that sort of a situation, you pile on your defensives, sit ready to pump in money into your high beta names as soon as this period of the first half gets over and more clarity comes about. Would you take that approach and sit on the edge waiting to see the second half and the bang that the second half comes back with?
Well, I'm not a great believer in that approach. So if you had, in hindsight, in 2013 taken a bet that Mr. Modi is going to come with an absolute majority, right, and then you would have gone and bought the high beta stocks and you got rogered over the next 3, 4, 5 years. That trade worked only for a month.
Okay.
Which is, I'm coming to the same point, that what essentially matters is that where do you think you got the biggest scope for earnings recovery? I think that part of the story in India seems to be fairly intact, in a sense that you had, I think, 4 years of 6% CAGR. The first half, FY19, you are at about 11%. Second half, you are looking at somewhere close to about 16 or 17%. Next year, you're at 23%. Let's say you will scale down, but you're still growing at about 15 to 20%. That is quite okay. My sense is that you just have to ride out the volatility more than anything else, rather than trying to be very smart and say that, okay, we are getting into a volatile period, I'll own a consumer staples, and then, when I get some clarity, you never get clarity in stock markets. You'll always have something else to worry about, right? So you would have thought about the fact that, state elections are very important. What became the anchor variable was the oil and what happened to other parts of the world. Don't even talk about elections right now because stocks were down about 20-25%, right? So you don't know what's going to there in February.
But just from the point of view of sitting on a little bit more cash, waiting for, if not being fully deployed, just in case the opportunity comes back.
Well, you can try and do that. Maybe you can get lucky around that, but I am not a great believer that you can time that to perfection. Secondly, I suspect that you will have far more clarity about what's going to happen in elections way before the elections are in place, right?
Yeah.
Essentially, what I'm talking about is that whether you'll have some sort of coalition in UP. UP is what matters. You got 83 seats. Whether BJP gets 60 seats or 30 seats depends upon what sort of Mahagathbandhan happens over there. So I think that you will have that clarity far earlier, right? And I think the base case scenario for the market seems to be 220, 230 seats for NDA. No one is saying that we'll get an absolute majority. So it's not that you're going to run up in expectations of favorable outcome, which is why I would suspect that downside is limited.
Okay. I want to talk about the here and now, right now, before we talk about the long term as well, Nirav.
Yes.
Crude coming off, Dr. Reddy's has some positive news flow. Yes, Bank is in the throes of bunch of news flows around as well. How are you approaching all of these? Let's start off with the biggest variable over the last couple of weeks, and that is the sharp pullback in crude prices.
Right.
Now, one is the India macro, which we all know is positive for. How do you approach the micro with crude doing what it is doing, and the fact that this may not be a permanent fall?
See, I think the problem for the market is that these things matter when they matter.
True.
Right? So you go back and look at the narrative around the crude oil at about $80-85 and the current account deficit and rupee, right? And if you look at the Q2 current account deficit was 2.7%. You had almost a 2.7% current account deficit in June 17 last year, right? And rupee was appreciating, right? And this time you had a complete carnage. So that, I think the dominant variable was the FI outflows, the debt and the equity outflows and all. Every $10 is roughly about $13.5 billion or 50 bips to current account deficit. It is a cause of worry, it's not a cause of panic, right? So I don't lose my sleep. And we were talking about the fact that even in 2008, you had oil at about $80, $85, $90. Your economy is twice the size. You are $2.4 trillion economy, right? What you are spending on oil on a per capita basis is significantly lower. It will matter on a 2 or 3 month basis, right? As long as this oil is in $60, $70, $80 band, I don't think it's a cause of worry at all.
Yeah, which is why I said, so the macro and the impact on India is fine. I mean, you know.
Right, absolutely. And therefore, when you come back to micro, all you are saying is that what is going to happen to the earnings? Earnings are going to fire. And I'll hold my comments over there. I'm slightly worried about what is happening around NBFC. That is almost about $22 trillion of funds, credit, which is there with NBFCs. And I think we've handled it absolutely in a very pathetic fashion, right? So I would hold RBI responsible for that. We cannot have morality preceding economics. The first thing is that you have to ensure that, it has to be smooth flowing credit. That segment of the market is going at 22%, right? And look at cement. Cement is doing 15% volumes, right? So it's not only infra, it's also rural housing. I'm reasonably sure that you're going to see some sort of pullback in the growth rates that you're seeing in cement, housing and stuff like that. So credit is essential to the well-being of an economy. And I hope that we find a resolution around that. So outside that, I think I'm fairly okay in terms of the micro. But it's our own doing.
You don't think the banks can step in to fill the gap of NBFCs? I mean, we've got more banks now coming in, starting to raise funds to meet this additional demand. Recently, we had ICICI Bank talking about raising about 25,000 crores.
Right. So I think you will have some sort of liquidity flowing from banks to NBFCs. Banks cannot replace what NBFCs are doing because that last mile asset underwriting, credit underwriting is a niche that they've dominated for such a long time. I don't think that banks have got the wherewithal to say that, can you give a 10 lakh loan to a micro SME who doesn't have proper papers in place, right? So there's a different kind of underwriting. They can do lending to NBFCs. A part of that could be happening, but still NBFCs have to fire. I think there's a space for them, which is why they've done reasonably well.
Okay. Let's talk about pockets. OMCs. Serious damage was done. I think they've come back to the levels that they were at when this 1 rupee penalty was levied.
Right.
What now?
So we messed up, right? And I think this is exactly like what happens at, you give in at the worst possible moment. That 1 rupee was uncalled for in a sense that you could have done it without announcing it, right? most of the election times you stop taking price increases. People assume that this was seen to be going back on some sort of reforms. We are bullish on the stock simply because of the fact that even today you are looking at almost zero marketing margins in perpetuity, right? I have no doubt that irrespective of what is the election outcome, if you go 1 year out, I don't think that any new government is going to turn back on the reforms, right? It doesn't matter. People are used to it, consumers are used to it in terms of paying higher or lower, depending on what the oil prices does. Yeah, so these are all very great buys. I have no doubts about it.
Okay, from a positional or a long-term perspective,
I think now what the oil is doing, even from a medium-term perspective and even from a long-term perspective.
Okay, so tied into that question is a space that you very closely, and every time we talk about that, and that's aviation.
Right.
What does one do here now? We have an airline that is floundering.
Right.
Almost there. I mean, today's dailies are reporting about how pilots are calling in sick because they're not getting paid their dues.
Right.
What does that do to the other two? I mean, a conversation on jet is meaningless because there could be a corporate activity which would influence the stock price.
Right.
What about the other two?
Right. So my sense is that if you got a market leader with a 43% market share reporting significant amount of losses, it's time to buy into the industry. Right. So Indigo reports significant losses. Right. So it seems to us, at least at this point of time, that a part of that is strategic. In a sense that it understands that Jet is in trouble, it understands that SPY doesn't have a great balance sheet, and therefore it's time to ramp up the market share. Not a very great thing to do as far as I am concerned. Go back 20 years and look at initial readings of Michael Porter. You allow weak players to sustain. You don't push them so hard that they get into stronger hands, which is exactly what is happening.
Yeah.
You'll end up fighting Tatas and the Singapore Airlines. You're better off fighting Jet, right? So I think that too will change. And now you got benefit of lower oil prices. So most of them are going to make money. So I think that you will see some sort of a strategic pullback from what Indigo is doing, but probably the best time to buy into the stocks. And secondly, please appreciate the fact that oil has fallen so fast, right? That people have not been able to digest it.
Yeah.
Ideally, the aviation stocks and OMC stocks should have been higher by 30, 40, 50%. It has not happened because you're just trying to figure out, is it for real? Are you going to have a pullback? So I think it will take time for those things to sink in and you reassess how things are going to look like. So I like the space.
I just want to pull that chart up before Devina takes that next question. Nirav Sheth spoke about how quickly the pullback has happened in the chart, which we showed at about 8:45 or 8:50 a.m.
34 days.
Yeah, 147 days or thereabouts to climb to those 85 levels, and 34 days, just 34 days to come back to those levels. That's the speed that we're talking about.
Which really would require some amount of digestion right now. But Nirav, while we're talking about crude oil, I just want to shift to another pocket, which so far, the interest probably is there. Some of the stocks are fairly owned, but capital goods is a pocket. Now that we're seeing good numbers even coming in from the IIP numbers, if you take a look at the growth of capital goods within the IIP numbers, for FY19, almost 7.3% growth out there.
Sure.
Do you see that being a significant kicker and maybe a medium term to a long term story for names like an ABB, Thermax? What would you do here?
So I think that you are at the threshold of a big upturning cycle. So you're doing some work on utilities. So I mean, what necessarily matters is two sectors. It is oil and gas and it is utilities. Utilities by far is the largest, right? And large part of the problem that you're seeing right now is because you've got complete supply shock in terms of what is happening in utilities. So the load factors are at about 60%. But what you need is that you need power on peak hours, which is 2 hours in the morning, 2 hours in the evening. That is at 70%. Now that rises about 7-8%. That means that 4 years out, you'll hit about 78%, which means that you have to set up power plants today. If I need a capacity coming 4 years out, 5 years out, or else I have a severe supply shock in terms of power. Can you set up a capacity today? Absolutely no way. And there are no backward linkages, there are no forward linkages, right? Even if Reliance were to set up a power plant, there won't be any bank funding because you need to have contracts in place. And therefore it tells you that you are sitting on a time bomb. If our hypothesis and analysis is right, you are going to see serious bidding for stress power assets. It has started with Bhushan Power, but as you've seen more of these guys getting into NCLT, you are likely to see serious amount of bidding happening over there because you got an option of putting 7 crores for a greenfield. You take your cut, you bid at 2.5 crore, 3 crores, assume nothing happens in India for the next 1.5, 2 years, right? Build your financing cost into it, it's still a deadly deal. So yeah, you probably about 6 months, 1 year in terms of people getting a sense in terms of how things are going to move.
So the depressed valuations right now should be a steal.
Absolutely. I'm bullish on utilities, and I think you are just some time away from getting into stocks like BHL and all that. You can probably try and time it, hopefully. But from here and 2 years out, 3 years out, these are the stocks that are going to make money for sure.
Okay.
What else is on your list, your watch list? Probably something that's on the cusp of a big bang move or something.
Big bang move I've maintained this year back, and I think we took a hit for 6 months, and now I think we are ahead, which is corporate banks. I had mentioned I don't care about the markets. Axis Bank, ICICI Bank, they are going to fly. I have no doubts about it. So I don't even care about the market. So one single large cap idea, and we are not talking some small cap sectors, right? So these are once in lifetime opportunities where you can seriously bullish on a big rebase of earnings that is going to come.
I must say ICICI Bank has gained quite a bit from the last time that Nirav made this call, which was maybe a couple of quarters ago. Since then, ICICI Bank and Life is doing very, very well. You sounded inherently bullish until now, Nirav. I'm forced to ask you one question before we wrap up, and that is, where is it that you're circumspect on in the current scenario?
Well, I'm worried about some structural issues. For example, I'm worried about judicial overreach. I'm worried about regulatory overreach, stuff like that. And I think this can have long-term implications because, I mean, think of it. Today, SEBI comes and tells you that, for 10,000 crores, this is what you charge. For 20,000 crores, this is what you charge. What does it do? It kills the innovation in a sense that if someone wants to build an ETF industry, he is worried about the fact that you're progressively reducing my competitive scenario. Likewise, you can go across the sectors, and I think that bureaucrats, they are having their own world, right? So that's not a very healthy situation for innovation, and that means that you will have, and that could be one of the things that can actually impair your the investment cycle, right? So if you, I think the sense that people have that there is some amount of distrust for the corporate sector at large, and therefore you sort of working with you think that they are out to profiteer rather than making profits. I think they need to balance that approach, and then the confidence comes back, and then things are okay. So outside that, there are a lot of risk, interest rate and go up, down, all those things. I'm not worried. There's a part of the cycle. These things hit you over a period of time, and they hit you very badly.
Let's hope that some of these which are logical to be changed do get changed as well. But Nirav, thanks so much for joining in today.
It's always a pleasure to be here.
Yeah, and it's a pleasure to have you always.
Yeah. Thank you.